Good morning. Thank you for joining today's daily webinar, where we answer your questions live on the air. We also cover topics surrounding solo 401k plans, traditional 401k plans, as well as self-directed IRAs. Today's topic is Discount Solo 401k, a provider of solo 401k plans, is closing. What are your options and next steps? So again, welcome. And chances are you've received some unexpected news from your current solo 401k provider, which is Discount Solo 401k. They're exiting the solo 401k business. So again, we're going to go over this topic today. We'll also answer your questions live on the air here. So go ahead and shoot over your questions as they come up, and we'll pause and answer them as they come in. As always, please subscribe to our channel for more videos like this. We go live every day, at least once a day, many times twice a day at 10 a.m. Pacific time, and then again at 1 p.m. Pacific time. Please also like this video to help get the word out to other solopreneurs like yourself. Looks like we've got a question here. Let's pause and take a look at that question. I am having a local attorney set up an LLC for my upcoming solo 401k. I was looking at another provider, but taking another look at my solo 401k financial. Do you have any special provisions for the LLC setup? Should you just be basic LLC pass-through for me for taxation? I do see naming conventions as Word Trust LLC in your Q&A docs. So number one, you don't need to have an LLC in order to invest a solo 401k plan. That's one of the advantages of a solo 401k is that you can make investments directly through the solo 401k, which comes with checkbook control and wire control for that matter. And it's typically used to invest not only in equities, but also alternative investments like real estate, promissory notes, precious metals, cryptocurrency. So that's number one. Number two, if you're asking about a self-employed business, you don't have to have an LLC to be self-employed. It can be a sole proprietorship or it can be an LLC. And really, setting up an LLC is very easy. You don't need an attorney to do that if we're talking about a self-employed LLC business. You would instead register that LLC with the Secretary of State. So depending on your state of residence, you would go to that particular state's website, the Secretary of State of that state, and you would register the LLC. Of course, you gotta be able to walk the talk, meaning that just because you set up an LLC does not mean you're self-employed. It's the actual underlying activity. That is the material services. You have to be doing work, specifically self-employment activity to qualify for a solo 401k, and you cannot employ any full-time W-2 employees in your own business who work full-time. So in short, there's what's referred to as an LLC solo 401k, which entails opening a solo 401k and then investing the solo 401k in that LLC and then making investments through that solo 401k owned LLC, which again is not a requirement. Most clients just use the solo 401k because it comes with checkbook control already, which is different than than a checkbook IRA, whereby you set up a self-directed IRA and then you utilize an IRA LLC, aka checkbook IRA, whereby the self-directed IRA is then invested in the LLC and then you make investments through the checkbook IRA. But again, if you're talking about a self-employed business, you don't need an LLC, number one. You can do it as a sole proprietorship, or if you need an LLC, you just need to register with the Secretary of State. So you don't need to have a CPA or attorney set that up for you. Okay, so let me send you a link here that talks about the solo 401k LLC, if that's what you're referring to, which we do set up solo 401k LLCs, but again, it's not a requirement to make investments through the solo 401k. So let me share that with you here. I went ahead and share that link there on the live webinar here. Take a look at that. Let's see here. Looks like we may have some more questions here. Looks like we have a question here from Brad. I am a financial advisor who custodies clients at Charles Schwab. My question is, I have a prospective client who is a sole business owner, and Schwab will not let me set up a mega backdoor Roth conversion, and wondering if I can set it up with my solo 401k with mega backdoor Roth conversion and manage the account for this new client. Great question. The quick answer is yes. We have many clients that have existing solo 401k plans at Schwab, and then they will restate that existing Schwab solo 401k to a solo 401k from my solo 401k financial. And let me pull up some information on that from our website, and then we'll continue to talk about it more. So as you already implied in your question, Schwab does not allow for what's referred to as voluntary after-tax solo 401k contributions as part of the mega backdoor. They also do not allow for solo 401k participant loans. They also do not offer the auto contribution credit with their solo 401k, which is a $1,500 dollar for dollar credit for having a solo 401k, where the IRS is essentially subsidizing your solo 401k costs for many years. That's known as the solo 401k auto contribution credit. And the plan for my solo 401k financial comes with that auto contribution credit, which started to be offered beginning January 1st of 2024. It's a $500 auto contribution credit for $500 for 3 consecutive years, where you get to deduct $500 on your business side, dollar for dollar, for 3 consecutive years in the amount of $500, which again covers the cost of having a solo 401k or switching to a solo 401k from my solo 401k financial. But let me pull up information. And what's interesting about the auto contribution credit is that you are not required to make contributions to the solo 401k to qualify. You can contribute in any amount, or you don't have to make any contributions. What is more, existing solo 401k plans can be upgraded to a solo 401k from my solo 401k financial, and then you would qualify for that auto contribution credit of $1,500 started in 2025 for 3 consecutive years. So $500 for 2025, $500 for 2026, and another $500 in 2027, and you file Form 8881 each year to get that $500 credit. Okay, let me get back here to information from our website that I can share with you regarding restating an existing solo 401k at Schwab to a solo 401k from my solo 401k financial. Let me share this with you here, and then we'll talk about it some more. Okay, I just shared over that link with you here. Take a look at that while I answer your question. So one, we have hundreds of advisors that restate existing solo 401k plans at Schwab to our solo 401k plan for the reason you mentioned there. That is, they want to be able to do the mega backdoor Roth solo 401k, which is not available with a solo 401k offered by Schwab. The way it works is that your existing client solo 401k at Schwab would get restated to our solo 401k plan so that they fall under our IRS approved solo 401k plan document that number one allows for voluntary after-tax solo 401k contributions, and number two, it allows for conversions of those voluntary after-tax solo 401k funds to a Roth IRA or to the Roth solo 401k. What is more, you can continue to use Charles Schwab for the brokerage accounts. Yes, you heard that right. Even though Charles Schwab offers their own solo 401k, they do offer brokerage accounts for a solo 401k offered by my solo 401k financial, whose plan documents allow for the mega backdoor Roth solo 401k. Schwab refers to those types of brokerage accounts that they offer for a solo 401k for my solo 401k financial as company retirement brokerage accounts. And we will prepare those for the advisor on the institutional side. And then you can submit those to Schwab directly through your back channel, or we can fax them into Schwab for you. And they'll be set up on the institutional side. Subsequently, that existing solo 401k offered by Schwab will get transferred internally to the new Schwab company retirement brokerage accounts for the solo 401k offered by my solo 401k financial. Therefore, you don't have to liquidate your securities. Those can be transferred over in kind. What is more, we'll shepherd that process by preparing the applicable internal transfer form and include the necessary language that will notify Schwab that number one, it is not a reportable event. Number two, it's not a taxable event. Why? Because you're not closing the plan, you're instead switching that plan from Schwab over to my solo 401k financials plan. And therefore, my solo 401k financial will be the new plan provider. We'll also handle the reporting for that solo 401k, including the reporting of that mega backdoor Roth solo 401k conversion, which requires issuing a form 1099-R, even though it's not reportable when you convert a voluntary after-tax solo 401k to the Roth solo 401k, provided that it's all gains. It is going to be reportable on a Form 1099-R to the IRS. And it's a twofold reporting process. Not only does the Form 1099-R get issued to the participant, it also gets issued to the IRS separately. So it's a very important process. And again, that's covered in our pricing. Hopefully that breaks it down for you. And again, I share that link from our website that talks more about that restatement process. We can also do it on the retail side for Schwab solo 401k clients. So both on the institutional side for advisor clients and on the retail side for non-advisor clients. All right, looks like we've got a lot of questions coming up here today. We haven't even started our topic for today, which is Discount Solo 401k, which is a provider of solo 401k plans. They have decided to exit the business. So we want to go over that and also how you can restate that existing solo 401k from a company called Discount Solo 401k over to my solo 401k financial. So let's start that presentation and then we'll pause and continue to go over all these questions here. Go ahead and continue to shoot them over as we go over today's topic. So let me share my screen here. Give me a moment here. So again, there's a company called Discount Solo 401k who offers solo 401k plans. They are exiting the business. So again, if you're here, chances are you've received some unexpected news. Your solo 401k provider called Discount Solo 401k company, they are exiting the solo 401k business. Again, please subscribe to our YouTube channel and like this video to help get the word out to other solopreneurs like you. And you're not alone when it comes to the fact that your current solo 401k provider has decided to exit the business. We've seen a wave of low-cost solo 401k providers exiting the space. and also they exit the space, or maybe they raise fees, or they eliminate key features. And that's left a lot of business owners scrambling. So we're going to continue to cover that topic today. So what we'll cover today, the risk of doing nothing, IRS penalties, loss of Roth, features, loan options, your options, full service upgrades, self-directed rollovers, how to transfer your plan from discount solo 401k, which is a solo 401k provider exiting the business without triggering a taxable event. This isn't just a compliance issue. So why does this matter? Well, it's your retirement future. Whether you are actively contributing, planning a mega backdoor Roth, investing in real estate, private equity, promissory notes, cryptocurrency, other alternative investments, or even equities. Your decisions now will determine what doors stay open. So we'll continue to cover this. Let's pause here and take a look at some more questions here, and then we'll circle back here. So we've got a question here from Phil. I'm also working on setting up my solo 401k LLC for real estate in Texas, but looking to open a series LLC. My lawyer stated that the LLC for the solo 401k has to have special language related to IRS and 401k plan, not just a plain LLC. Your lawyer might need to talk with the solo 401k team to be sure the language is correct. Thanks for that feedback, Phil, and that's exactly right. If you're talking about a solo 401k LLC, then you want to make sure that that LLC operating agreement contains all the required IRS language and 401k language. All right, let's continue here with some other questions here. And it was mentioned I cannot set it up on my own behalf. Well, if you're referring to a solo 401k LLC for investing in alternative investments, then that's correct. You typically need to use a provider like my solo 401k financial, which we draft those type of LLC operating agreements, or you can use your attorney. But again, if you're trying to set up a self-employed business, that's very easy. You just go to the Secretary of State website and register the LLC, and that'll be set up for your self-employed business, and then you elect whether you want to be taxed as an S corp, partnership, or a sole proprietorship. If you want to be taxed as an S corp, then you would elect that status with the IRS. So let's take a look at some more questions here. Okay, looks like there are no other questions at the time, but again, go ahead and continue to type your questions over as we cover today's main topic, which is discount solo 401k company who's a solo 401k provider is exiting the business. Therefore, you need to restate that existing solo 401k over to a new provider, a provider like my solo 401k financial, for example. So we're also going to talk about what happens to your solo 401k plan documents when your solo 401k provider goes out of business or exits the business. Also, we're going to answer the question, can I move to a new year, to a new provider mid-year? What about Form 5500 easy reporting? How do I keep Roth contributions and in-plan conversions? All right. So again, there's a company called Discount Solo 401k who's exiting the solo 401k business. And one option is to transfer that existing solo 401k to a self-directed IRA if you're no longer self-employed, or if you no longer want to continue with the solo 401k plan. A second option is you can actually transfer that existing solo 401k plan from Discount Solo 401k to another solo 401k provider. So you can transfer over to my solo 401k financial. Now, when you and that's called a restatement, when you switch from one solo 401k provider to another solo 401k provider. And let me get to the right slide here. So if you don't restate that existing solo 401k, then you're going to need to make sure that you either close that solo 401k plan and transfer it to a self-directed IRA, or that you choose a solo 401k provider that does provide a self-directed solo 401k. When you restate a solo 401k from a current provider over to a new 401k provider, that's not a taxable event. So therefore, it does not result in issuing a Form 1099-R or a final Form 5500 easy, because you're not closing the plan. You're changing solo 401k providers from provider A to provider B. Also, you can continue to hold those solo 401k funds with the current bank or the brokerage firm. I know a lot of clients of Discount Solo 401k use a bank already called Solera Bank to hold those funds, and they continue to do so when they from my solo 401k financial. My solo 401k financial will prepare new plan documents so that you fall under the solo 401k plan offered by my solo 401k financial. Let me share my screen here so we can talk more about that. Okay. So again, there's a company called Discount Solo 401k who's closing down. That is, they're no longer going to be in the solo 401k provider business. And also, when you restate that solo 401k from Discount Solo 401k company to a solo 401k from my solo 401k financial, we're going to add the auto contribution credit to that solo 401k, which is a $1,500 auto contribution credit. So it's really not going to cost you anything to change solo 401k providers from Discount Solo 401k company to my solo 401k financial. And here's an example here of how the auto contribution credit works. So if you switch to a solo 401k provided by my solo 401k financial here in 2025 from your current solo 401k provider, that is Discount Solo 401k company, we're going to draft your solo 401k plans for the auto contribution credit, and you're going to be able to deduct dollar for dollar a $500 credit here in 2025, a second amount in 2026 for $500, and a third amount of $500 for 2027. So that's going to cover the cost of having a solo 401k plan for my solo 401k financial for many years. So when you restate that existing solo 401k to my solo 401k financial, the cost is going to be $650, because now you're going to fall under our solo 401k plan, which is a robust solo 401k plan, meaning that allows for mega backdoor loans, invested in alternative investments, also employer Roth contributions, and so forth. So this slide here does a good job of showing the cost of having a solo 401k with my solo 401k financial for 3 years, whereby by having that auto contribution credit, you're not required to contribute to the solo 401k to qualify for that auto contribution credit. You just need to have a solo 401k plan that allows for that auto contribution feature. And not all solo 401k plans allow for it, but a plan from my solo 401k financial does. So this gives you an idea of the savings, and you're still going to be able to save more for, it looks like, for about 6-7 years. That $1,500 auto contribution credit is going to cover the cost of switching from Discount Solo 401k company to a solo 401k offered by my solo 401k financial. And what's great about switching to a solo 401k, you're switching your existing solo 401k plan from Discount Solo 401k over to my solo 401k financial, is that my solo 401k financial takes care of the ongoing plan updates and the reporting for a flat fee of $125 after the first year. So the first 12 months is $650, which covers switching over and also that first 12 months of compliance support. And compliance support includes issuing Form 1099-R, which is a twofold process. One gets issued to you, and a second piece of it has got to be issued to the IRS, filed electronically. We take care of that. Some providers just give you instructions on how to prepare it, but they don't tell you that it also has to be submitted by the provider to the IRS. So it's a twofold process. We also take care of the Form 5500 easy at no additional cost for plans where the market value is greater than $250,000. So for $125 a year, we take care of all reporting for the plan, whether it's restatements, plan updates, Form 1099 reporting for distributions, conversions, especially if you're age 73 and you're required to make distributions. We take care of that 1099 reporting for that as well. For conversions, the mega backdoor conversion or the conversion of pre-tax solo 401k funds, as well as that Form 5500 easy, which applies not only when the value of the plan is greater than 250,000 in total, but also if you terminate the plan, you have to file a final 5500 easy regardless of market value. Let's see if we have any other live questions here. It looks like we don't have any live questions here, so we'll continue with our presentation today, which is there's a company called Discount Solo 401k Company who's exiting the solo 401k business. We're discussing your options and the next steps. So we talked about compliance support. Let's talk a little bit more about the $1,500 auto contribution credit. So again, by switching over from your current Discount Solo 401k plan document provider, you're going to qualify for the auto contribution credit, which is offered by my Solo 401k Financial. Our plan has that feature available. With these credits, the ultimate cost to restate that solo 401k plan from Discount Solo 401k Company to my Solo 401k Financial is going to be free. The $1,500 government stimulus is greater than the cost to restate that solo 401k and maintain a self-directed solo 401k for years. A tax credit is not merely a deductible expense, but a dollar for dollar reduction in your business tax liability. It is much more favorable. So a dollar for dollar tax credit equals $500 per year for a maximum of $1,500 over 3 years. So again, if you switch over to a solo 401k from my Solo 401k Financial here in 2025, you can start taking advantage of that $500 auto contribution credit here in 2025 for $500. So you would file Form 8881 and attach it to your taxes to claim that $500 credit. And then you would file a second Form 8881 for $500 in 2026, and a third one in 2027 at $500, totaling a total of $1,500 over 3 years. And again, this dollar for dollar auto contribution credit can be added to your plan. And if you're an existing client of my Solo 401k Financial, this credit was not available until January 1st of 2024. So if you've opened the plan with this prior to January 1st of 2024, we can upgrade your plan to allow for this auto contribution credit as well. Just submit a support ticket and we'll provide more information on how to do that. Once we've added that credit to your plan, or in your case, if you switch over to a plan from my Solo 401k Financial, you can opt out of making contributions. So you're not going to have to make contributions to the plan. You can contribute at whatever amount you want up to the overall limit, or you don't have to contribute at all. In other words, you're not required to make annual Solo 401k contributions to qualify for the tax credit. You use Form 8881 to credit. It's a $500 credit each year for up to 3 years, totaling $1,500. You can read more about it under IRS code section 45T, notice 2020-68. We also, let me share a link here with, let me share a link from another source. We did a blog post on a website called the White Coat Investor on the auto contribution credit. Let me pull that up here. Give me a moment here. So you can learn more about it. You don't want to confuse the 401k tax credit with the solo 401k auto contribution credit. They're both different. The solo 401k qualifies for the auto contribution credit. Let me share this post here that we did where it was published by the whitecoatinvestor.com. One of our owners here put that together. It's a really good blog post that really breaks it down. See if I just shared it with you, but here it is. George Blower went ahead and put that together. He published it about a year ago, a little over a year ago, but it's a really good write-up that he did. So take a look at that because it really breaks down the $1,500 solo 401k credit. And unfortunately, a lot of CPAs are not aware of this credit, and they oftentimes confuse it with another credit called the tax contribution credit. This is the auto contribution credit we're talking about. So again, take a look at this post here from the White Coat Investor that talks about it. It's a really good write-up that we did. Okay, excuse me. Let's continue here with our webinar here. Looks like we may have some other questions, so let's take a look at those questions, and then we'll pick up on our presentation today. Looks like we got an email here, or question from Patel. I just heard back from my CPA that we aren't eligible for the $500 tax credit. Oh, this is great. This is perfect timing because I just shared with you how CPAs confuse the auto contribution credit with the tax credit. So take a look at that link I just sent to you there. But let's look at your question. He pointed that this form IRS website, at least one highly non-compensated employee. The plan must have at least one employee eligible to participate. Again, your CPA is not understanding that this is the auto contribution credit. It's not the tax credit. He or she is confusing the auto contribution credit with the tax credit. Take a look at that link I just sent to you from the White Coat Investor where we did a post on this topic. And there it is right there. So take a look at that there. Share that with your CPA. Help spread the word because unfortunately, a lot of tax professionals and CPAs out there are misinforming their clients because they're not aware of the differences between the auto contribution credit, which applies to solo 401k plans, versus the tax credit. They're both different. So take a look at that and help spread the word out. All right, let's see if we have any other questions for now. So looks like we don't have any other questions so far. Go ahead and keep shooting over your questions here in the live webinar. We'll pause and answer those questions as they come in. In the meantime, we're going to continue with today's topic, which is discount solo 401k company is exiting the solo 401k business. What are your next steps? What can you do? We've been talking about how you can restate that existing solo 401k over to a solo 401k from my solo 401k financial. And the cost to do so is virtually nothing because a solo 401k plan for my solo 401k financial comes with the auto contribution credit, which will cover the cost of having a solo 401k for many years. So again, you can switch from discount solo 401k company over to a solo 401k plan for my solo 401k financial. It's going to be, it's neither a taxable event nor a reportable event. Funds can continue to be held at the existing bank that you're currently using for that solo 401k. You can keep the same solo 401k plan name, same EIN number. You would go to our website under open account. complete our online application where we ask some information, including the original effective date of that existing plan that you have with Discount Solo 401k company, so that we can then restate your plan to our plan. We need to make sure we populate that original plan date on new plan documents. We're going to take care of the ongoing compliance support at no additional cost. That's covering our annual fee. So our annual fee is $125 a year. It's actually one of the lowest fees in the industry, especially when you take into account that we take care of 1099-R reporting and Form 5500 easy for no additional cost. That's all covered on our ongoing annual fee of $125, and it comes with that $1,500 auto contribution credit, which not all plan providers allow for it. Our plan does have the necessary language to do so, and we'll provide you with information on how to claim that credit on your taxes, which is pretty straightforward. You generally just have to file Form 8881 to claim it. All right. So let's see if we have any other questions here. It looks like we've come to the end of our presentation. We appreciate your questions. Thank you for joining today's daily webinar. We'll be back again today at 1 p.m. Pacific time. Please subscribe to our YouTube channel. We go live every day. Please also like this video to help get the word out to other solopreneurs like yourself. Looks like we have one more question here. Does my existing solo 401k, which was set up by you in 2013, need to be restated since I was not active with you since 2014? Well, that's kind of an interesting question, because active is a very broad word. When you say active with you, I mean, one, as long as you have been paying your annual fee, then you're active with my solo 401k financial, unless you transfer your plan out, which I don't think you have. Send us an email and we can look into that further. But all of the plans offered by my solo 401k financial are already current for the latest regulations. But if you want to send me an email, go ahead and send it to business@mysolo401k.net with your particular question and your situation, and we'll take a look at your account. All right, again, thank you for joining today's daily webinar. Until next time, have a great rest of the day.